ANZ profits crash and there's no dividend. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I have my stein of coffee and it looks like ANZ has joined the other big four banks in announcing, well, a huge hit to their profit. So their profits have tumbled 62% after a $1 billion hit. We're only waiting on the next one, the last one, CBA. So if we jump over to this other screen, we can see, well, their shares are now at $16.38. If we have a look here on Trading View, in Feb, they were at what, $26.90? 27. So that's a fairly big hit. Now the technicals are telling us to sell, and well, we'll have to see how it goes today. Let's go to the full featured chart, and I'll just update it to show. This is the hourly rate. We'll change. Can I do 1 second if I don't pay? Nope, I don't. I'm not paying. What do I get? What do I get? This is the fastest I can get. So we can see here. I mean, there you go. This has been released. We'll see how it goes. So let's have a look at this article, guys. Let's have a look, and then we'll go through the media release that ANZ issued to the ASX. So ANZ will hold off paying shareholders an interim dividend after its first half cash profits plunged 62% on a $1 billion pandemic hit. So remember, the others, NAB, they paid a dividend. I don't think Westpac, they weren't clear if they were going to or not. But you know, these big four banks are a big chunk of the dividend payers here in Australia. You want those dividends. The big four lender on Thursday said it was deferring its first half payout following guidance from prudential regulator APRA that banks and insurers should seriously consider doing so until the economic outlook is clear. And that makes a lot of sense. The last thing you would want would be a bank getting in trouble because they paid out a dividend. Even the shareholders wouldn't want that. You'd rather want your asset to be safe and secure and to make sensible decisions. Remember Qantas looking at, wanting government support and loans when they did a share buyback just last year. It's terrible optics. It shows a lack of planning. A year ago, it made a payment to shareholders of 80 cents per share. The deferral comes as ANZ's statutory net profit for the 6 months to March 31 fell 51% to $1.54 billion on credit impairment charges of $1.6 billion, including increased credit reserves of $1 billion for the pandemic impacts. And here we have Julia Lee, who didn't write the article, but she's noting all the different times when dividends were deferred. In the 87 stock market crash, the recession we had to have, the GFC, and cash profits fell by 18% in 2016, and now the corona crisis. The bank said valuation of investments in Asian associates was also impaired by $815 million during the half, largely due to the impact of the pandemic. Cash profits plunged 62% to $1.32 billion, and operating income dropped 4% to $8.89 billion. ANZ Chairman David Gonski said the decision to hold off on paying a dividend was not a reflection of the bank's financial health. It's not. He said ANZ had not received any concerns from APRA regarding capital levels. So it looks like they're just playing it safe, hopefully, if he's to believe. They're playing it safe. Because remember, this is only just the beginning of all of these impacts that we're starting to see flow through the economy. One day we're getting positive news, the next day we're getting negative news. It's all over the place. People haven't really, a lot of people are on JobKeeper and they're sitting at home doing nothing. So the unemployment figures aren't accurate. The banks are giving people a 6 months holiday on their mortgages. Some people would be at forced sale before then. So if this drags on, if we get more restrictions or a second wave, and then we have more lockdowns and more economic impact, how long can the banks sustain these mortgage holidays for people before they start needing forced sales? The board agrees with the regulator's guidance that deferring a decision on the 2020 interim dividend is prudent given the present economic uncertainty, and that making a decision at this time would not have been appropriate, Mr. Gonski said. This was a very difficult decision, and the board considered all options available as we understand the impacts this will have on those shareholders who rely on the dividends. ANZ said it would consider all factors over the coming months and will continue to assess the evolving situation, including the severity of community lockdowns, before determining a final position on the interim dividend. So operating income is down 4% to 8.89 billion. Cash profits down 62% to 1.32 billion. So they're still making a profit. Net profit down 51% to 1.54 billion. And the interim dividend is deferred. So, I mean, this is going to affect some people who are depending on that dividend. They may need to just sell a portion of their shares. It's not the end of the world, is it? That's the advantage of having money invested in shares. They're very easy to sell. You can do it pretty much like that. Like that. You don't need to pay stamp duty. Okay, if you make capital gains, you have to pay that. But you don't need to get lawyers. You don't need to go through real estates. You don't need to do all these painful things associated with shifting property. So, yeah. So let's look at their key financial data from ANZ. This was released at the ASX today. So this will give us a bit of an understanding of some of the figures. So here are the key figures. Their statutory profit is down 51%, as was said. And I'm going to change it to a purple. Nope. A yellow highlighter. Cash profit is down 60%. Credit impairment charges have gone up 1.3 billion. Return on equity is down 732 BPS. Cert 1 capital ratio is still at 10.8%. This is the one you want to worry about. Okay? If that gets low, then the bank's going to get in trouble. It's going to get in trouble. So interim dividend. Decision deferred, updated in August 2020. So we'll find out in August if people will get their interim dividend. Maybe it'll be good news, then people will pile on. So the cash profit in Australia is down 23% to 1.4 billion. Revenue is down 3% to 4.7 billion. Expenses are up 2% to 1.9 here in Australia. And credit impairment charge is up $0.4 billion. So customer deposits are up 5% to 213 billion, while customer lending is down 2% at 329.8 billion. So what does that tell you? Is this an indicator of, well, maybe more people are saving? It could be. So let's have a look at what's happening in New Zealand. The cash profits are at 6 billion New Zealand dollars, down 20%. Revenue is at 1.8 billion, which is flat. Expenses have gone up 10% at 0.7. Credit impairment charges in New Zealand are up 0.2 billion. Customer deposits as well are up 5%. And customer lending is up 4%. It's interesting. So are the Kiwis, are they more confident than us Aussies? So institutional cash profits are down 38%. Revenue is up 5%. Expenses are down 1%. Credit impairment charges have gone up 0.7 billion. Customer deposits, this is the institutional money, has gone up 16%. And corporate lending is up 16%. Where is that little 2? Growth rate presented on an FX adjusted basis. Well, there you go. Interesting. Are more people moving to cash, perhaps? So where the institutional money is going it going to cash? So how they're responding to the pandemic. Protecting things that matter. Launched Australian and New Zealand retail and commercial customer support package, helping 180,000 customers with deferrals on loan payments. So you get to defer your loan. That's not a good thing. I understand why they're doing that. I can see how it can help people in a stressful situation, but it's not going to... It's going to delay people making hard decisions they have to make. If bad times continue, sometimes you got to cut your losses. Sometimes you got to sell those assets. Sometimes you got to get rid of that debt. Or sometimes your business ain't viable. So, joint lead manager on record, 13 billion. Treasury bond for Australian Office of Financial Management, helping fund Australian government's support package. Okay, so they've taken on bonds. Wow. They've donated 3.4 million to charity partners to help and support disadvantaged people in Australia, New Zealand, and the Pacific. Again, they've got 500 more people in the call centres, and over 95% of their people are now working from home. Now, who doesn't think this will not be a cultural shift? This is going to have an impact on commercial property. Don't you think? Are they still going to need the demands for those huge commercial premises? They've trained 300 extra staff. They've provided financial support to over 30,000 people. New Zealand personal home and business loan customers through their $12 billion loan deferrals in NZ. They've received approximately 105,000 repayment deferral requests on $36 billion of Australian home loans, 14% of their portfolio. Weren't we being told by all the spruikers that Australians are well positioned to ride this out? Property won't go down because everyone's years ahead on their mortgage. Why would you be deferring your home loan if you're years ahead on your mortgage? I'm worried about our banks not being so friendly in the future. In a couple, 5 years' time, maybe interest rates shooting back up. Am I the only one worried about that? So, yep, get that deferral. Like that to me is a sign of desperation. That's a sign of desperation. If 14%, nearly 15% of their clients are desperate, that's worrying. And that can shift the market, guys. If 15% of property owners are forced to sell their investment property, remember, it's just the last transaction that affects the value of everything. So if more and more people are getting desperate, if prices start going down, that's how your value shifts down. So repayment deferrals on 7.5 billion of lending to Australian commercial customers, representing 15% of their customer base. And that's business. And that ties into this beautiful chart that I'm bringing up here with business confidence. I mean, there you go. Look at that plunge, guys. So they've granted 1,345 temporary overdraft facilities to NZ banking needing more working capital. Bloody hell. That's the scary thing, guys. They've pre-approved 4 billion lending to 35,000 Australian small businesses with existing transactional accounts. If you're in a small business, are you looking to borrow money now? And explain to me why in the comments, because I guess if you have to, if you're borrowing money to pay for expenses, that terrifies me. And I've been there. I've been in that situation years ago when clients wouldn't pay. This is one thing that employees never understand, have never experienced, where you've got to, because, maybe you got 100 grand cash flow just sitting there. Oh, they're late. Very common in construction. You got to find the money, you got to borrow it to pay, and then that's a slippery road. So they've provided 16 billion in extra lending to mainly long-term investment-grade institutional customers. They're analysing customer behaviour and fast-tracking digital investments in readiness for future opportunities. Well, there you go, guys. There we have it. The half-year results from ANZ. No dividends, huge profit cut. But don't worry. They're letting everyone defer their loans. What do you reckon? Is this a good sign? We'll have to wait and see. Doesn't fill me with confidence. As always, let me know your thoughts and opinions in the comments below. Thank you all for watching. Please like, share and subscribe to the channel. If you want to support us, there are a range of ways you can. You can join the channel on YouTube or on Patreon for a small monthly fee. You can use our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from the HeiseSays blog, Pocket Squares, made by Rachel, right here in Australia. We also have the ability for you to send us gold if you're a Gold Pass fan, or support us on PayPal. Thanks, guys. I'll see you next time. Bye for now.